Hey, Marine Corps Brat first again. Seems like you're turning into the me of this channel. Of course, I was first in chat technically, but how are you doing this evening? I go ahead and get Weeble pulled up here so I can see what y'all are seeing. First like too. Yeah, what chart are we on here? We're on the 1 minute. That's not doing too bad there. Where were we closed out at? Yeah, right before Thanksgiving, it's always hard figuring out what to cook because you don't want too many leftovers in the fridge because turkey, stuffing, mashed potatoes, everything else. Well, there we go. Looks like we got more people coming in, maybe. So yeah, really, we just want to open this up a lot for aftermarket question, Q&A, and give a rundown of how the options chain looked at the end of the day. Especially, we didn't cover too much on lunch today, but yesterday, that was a whole lot of information to soak in. I know some people said they were taking notes, may rewatch, come up with questions and everything. So we're definitely open to taking any questions people may have in here. Hoping to see AMC Trapper pop in. I thought he said he was going to try to make it over. 39.16. Market combat! How's it going, Justin? Welcome to the stream. What do you mean by which is safer to start with? Or are you talking about, as far as different options to do? Well, puts and calls, they're just, two sides of the same coin. Your puts are for when the stock is running down, your calls are for when the stock is running up. So it really, puts and calls are dependent upon, which way the market is moving. Where can you get in at and where can you bounce off of? So, like we covered at lunch, we were looking pretty good for, the bull put spread because we had this rundown. If this support holds, which, it looks nice and strong, level support that, that even dollar amount, those are always good places to bounce off of. And then, you got to look and see, are you looking to do, straight single options, or are you looking to do, multi options like the vertical? Which, let's go AMC, we want the 10-day. This week shouldn't be too much options activity going on. How did we end up closing in regards to the vertical? Yeah, so bull put spreads. Yeah, we are on puts. We are on vertical. But for next week, we got some good price targets in here. As you can see, like I mentioned earlier, volume would pick up as the week carried on. So we've got more open interest. Yeah, it gets confusing, but which part is giving you trouble? We can start there, and any places, because you look at it and it's a screen and it's full of numbers and it can be overwhelming. So where's the simplest place to start for you? Where can we start building knowledge from? And there is so exactly, it's overwhelming. Yeah. So one thing I noticed in chat that I had seen this a couple times over the weeks, and this kind of got me. People were, when we were running, that is verging on financial advice. That's the hard part. The hard part is giving you knowledge without actually I wouldn't say not giving you advice, but it really does come down to your risk tolerances. How much can you safely risk? How much are you willing to lose? The best part, honestly, is watching YouTube videos, following going on different streams like this one, which I'm dedicating two options. Of course, I'm not the smartest in the world. I do make mistakes. Nobody's perfect. There's no perfect trader out there. But understanding the basics, and here's perhaps one of the basics that this was brought up in the stream during Clay Bro stream. So if somebody had, we'll just call it $42 calls. They had calls in for 42, and the price hit $42.05. And they were wondering why their contracts were still red. Why were they still down money? When you buy a contract, you pay a premium. So say you paid $100 premium. Well, you have your $42 strike price, but you have to add in the cost of that premium because you paid that. So your break even would end up being $43. I thought I had break evens on here. Yeah, they're just further over the side. I've been watching on Fidelity, but that's what is needed most, is the basics and how to work up from there. So you do your technical analysis, you look, you see where you want your contract at. Let's go ahead and, we're good on this option chain here. Let me get it up to where you can see. Okay, so you've done your research and you look and you decide you want to buy yourself some calls at $42 for next week, for the Friday of next week, because you figure we're going to run up about $44, $45. So good way to make some money here. So you have your $42 strike price. When you buy those contracts, you have to pay a premium. You're buying the right to purchase those contracts. And if you look, the mid-range, we'll call it 450. Well, if you scroll over, why are they giving me different break-evens? Yeah, they're giving me weird numbers here. When you buy these contracts, when you buy a call or buy a put, and this is when you're buying, you pay out a premium. You always have to add your premium, yeah, just like a down payment. More so than a down payment, like collateral. I'm trying to think of a good example here, but it's kind of like a down payment, but it's just kind of you're buying that right, and you have to account for the money you pay as your premium in with your strike price to find your break even. That'll tell you if it closes out at that price, you come out with the same amount of money. You don't gain, you don't lose. But there are people wondering why, they hit the $42 strike, and they're like, why am I still losing money on this? Because they had forgotten to take into account that you have to pay that premium also. And on the other side, when saying you can pay either way, what do you mean by pay either way? Are you talking buying calls and buying puts? Because on both those you're going to pay. If you're selling covered calls or selling cash secured puts, you receive that premium. There's a person on the other end of that trade who wants to be able to buy or sell. Yeah, so just remember, whenever you're buying, you are the person who's paying. Whenever you're selling, you are the person collecting cash. Just like any other transaction out there, the buyer pays the seller. And that, I don't know how much you caught the other, last night when we were talking about your theta and your time decay. That is what makes selling so powerful, because time works on your side. If you are buying, you want that movement as fast as possible, or you want it to just skyrocket over where you want it, because the longer you have that contract open, the more it's losing value, if that makes sense. And it's just, it's the same thing. It doesn't matter if you're doing single options, if you're doing bull put spreads, and there are advanced strategies where you have four different legs of a contract open at once. I played around with a bit of those, but those only work with a really, really stable, because you're kind of bracketing, you're bracketing where you want the stock to stay. It can really, if it moves up or down too much, it makes it to where you're losing money. And those are more advanced for when you start to do more analysis and you start to be able to identify when a stock is going to continue to move within a channel. Now, the thing here on Webull is they build a lot of them on their own. So you log in, you can see they've got all these prices listed on their own already, and their condors, their butterflies. These are they're a little bit more advanced than buying and selling puts and calls, buying and selling bull or bear spreads. These, I'm not sure if they actually. I don't do much option trading on here. I use Webull mainly for the technical analysis and to see the numbers of how it's all. How it all plays out. I do most of my trading on another app on my phone, but this is where I come to do all of my analysis, because Webull actually gives you really good information. It's clear and concise. You look 50-51 gives you all your information, nice straight line. It'll even tell you if the options, if they're gaining or losing ground. So yeah, a bull spread and a bear spread, just like a bull market. The stock's running up. So if you're doing a bull put, in a bull put, you want the stock to go up or stay the same. If it trades sideways or if it goes up, because you're playing puts underneath it. Just like if you're doing any kind of bear spread, like a bear call, you would do them up above in anticipation of the price going down. So do you want a bull market or do you want a bear market? That's the old thing, the bulls and the bears, well, it's the apes and the snakes for us, the diamond handers and the shorters, and that's a little bit behind the carbon fiber viper. We got to have snakes on our side too know how to strike at the hedge funds. Yeah, but a bull market is the market going up. A green market, making money on the upside. A bear market is a downturn market where stocks are going down. Yeah, one betting for, one betting against. That's a perfect way of looking at it. So yeah, just because you're working puts doesn't mean that you're against the market. The bull put spread is a classic example. You're using puts to undercut where the price is right now, because as the price goes up, that's where you make your money. It's still a put spread, and they're bear calls, bear puts, bull calls, bull puts. It just depends, which side of the strike price are you playing, and which way do you want the strike price to go. And usually on a lot of your lot of vertical spreads like that, if it's a sideways moving stock, meaning it trades at the same value, that's your theta. That's your theta kicking in. It's going to sit there and just move along. And there's also there are credit spreads and there are debit spreads. So there are spreads just like when you're buying calls. And I don't play with I don't play with debit spreads because I don't like paying out. I'd rather collect premium myself, which is why all the ones I do are credit spreads, because I want to receive that credit. I want the stock to move away and release my collateral at the end. I don't want to rely on price moving above a certain point in order for me to make my money. I want the stock price to go as far away from what I'm doing as possible and let me keep my money. Now, do we still have, is Justin still in the chat? I see Justin in the chat. It looks like, we had somebody pop in for a little while, but they left out. So we're going to go a little bit shorter with this one this evening. I know it's kind of impromptu. It hasn't been that long of a stream. But yeah, let 11 Mr. Simon know. This is actually going to be a shorter stream. I'm actually going to be wrapping up here. I'm still on the nasty thing at work where my phone can ring at any hour, and I'm looking to actually tomorrow will definitely be a lot longer of a stream. And hopefully get a few more people to come over from Claybro stream. More people in the live chat. I know it's evening. Some people are cooking. Some people are having dinner. But I certainly hope that a lot of the things that we went over, I hope those will help you. If you think of more things, write them down. Get question. If you have questions, have those questions. Tomorrow, looking during lunchtime, do another options update throughout the day, just in case I see, if there are any good windows, and, spreading the word, thank you. Go spread the word, let people know, because I guarantee you that there are people out there that There could be people losing money and they just don't, they've looked at it and they watch videos. But it's a lot better being able to pop into a live stream and actually ask. And I can bring up, I have no problem bringing up the charting. Oh, hey, look at this. Oh, Simon coming in right as we're wrapping up for the evening. Shout out to my Blue Wrenches. Thank you, moderators, for keeping the stream under control. I know it gets pretty rowdy in here. But yeah, I'm gonna go ahead and hop off here. I gotta. Yeah, unfortunately, Simon, I'm in that. I'm in a work period to where it ends at 8 o'clock tomorrow morning. But I'm under the phone can ring at any moment. We don't use that word because if you use the word, it invokes it happening. Yeah, you were the Marine Corps brat. She held down the chat tonight, so. But but yeah, Simon, we'll be on tomorrow. Tomorrow during lunchtime, in between streams, I'm going to try and get on here, get more information out. Of course, we're going to go over. If we see some good entry points. It's going to be a slow week. So this was actually a good week to start the stream because it's a slower week. It gives us more chance without too much crazy going on, and we hate seeing red days, but red days like this give a chance to see because everyone wants calls. Everyone wants calls. Well, this week's been a perfect example of how how undercutting the market using the bull put spread. You can see there's a lot of strength to it on this. So I will see both of y'all tomorrow in Claybro stream. I hope y'all have a wonderful evening. Thank you for coming by. And I will talk to y'all tomorrow, and have a good night.